Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Good morning, everybody. Welcome to the Wednesday morning edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope you guys all had an absolutely amazing day yesterday. We're going to do what we do each and every day, looking at our futures markets. S&P this morning, we're down about 10. We are selling off just a little bit after some overnight movement, and the Nasdaq's down 38. So a little bit of movement this morning, not a tremendous amount overall. So let's taking a look here. We see that the S&P big sell-off yesterday morning. As we had a very strong sell-off in the morning, sold off. This is actually, for those, I know a lot of people took this as a little bit of a breakdown below this area in here. So a really strong move away. That move away actually now has set up a potential future reversal area up in here, where we would consider this a speed candle move down with an opportunity to get in. The other thing I would do is say to take a look at this wick over wick level as well, as this also might be a reversal. My problem with it is that we've come close to it once and we came below it a second time, and so it's a slightly lower probability when that happens. If you want to look at a little lower, smaller time frame area, you might have this little wick over wick area here below the pivot high for a retracement sometime today. So keep an eye on both of those levels. On a 4-hour perspective, we are technically have lower swing low, lower swing high, which makes those shorts an okay thing to do, even though we're that close to the all-time high. Nasdaq. Now, the Nasdaq yesterday, we had set up a potential long on a confirmation entry, and we came close to the entry. Price rallied up and then blew right through it. So no entry there. And then on our next level, we got a little bit of a 2-to-1 reward to risk. And this, if you notice, this wick over wick area right here that we've got highlighted actually served as a little bit of a supply area as price moved. Now we got a little bit of a 1-to-1, maybe a 1.5-to-1 move away from there off of that wick, but it really just didn't sustain it very long. And so, we came back down into it and broke through. So looking at kind of what we have right now, I would say that you've got that same wick over wick area here in the Nasdaq as you have in the S&P. Your stop would probably want to be above this pivot in either case, because that pivot is really the better picture. The thing I like about the wick over wick area is the time of day that it was formed, but your stop would have to be above that pivot area. Crude oil. So crude oil yesterday, we had a really nice breakdown level. We talked about breaking down, and that's exactly what we saw occur yesterday. And then for a couple of days, I've been talking about the fact that we anticipate this gap to get filled. So leave me a comment down below if you took the breakdown in crude oil that we had talked about yesterday. I know a number of you did, and it's still running pretty well. But looking forward into later today, I think your best opportunity is a retracement back up into this area right here. This would be your better opportunity, I think, for today if you get a retracement back up into this zone. Gold. Now, yesterday in gold, we had talked about a potential for it breaking down below here. We got everything we wanted, and then it failed as it popped right back up. And that's okay. I'm all right with a small loss. When you take the small loss and gold breakout and couple it with the crude oil run, you're always going to be better off as long as you allow those winners to go. We then came right into our 15-minute level. Now, if you look at that 15-minute level, remember, it's a 15 minutes, so we've got to look at it from this perspective. We got a nice move away, and then it kind of came back up here. Now, it came back up, and so you may or may not have taken some money off the table down here, and if you did, then that's a little bit of a 1-to-1 reward to risk. Realistically, the better trade is just to move your stop to break even. And so if you move your stop to break even, then you're still in the trade. It hasn't really done a whole lot. But it's still moving along. So, you might want to move your stop down into here now to lock in at least a little bit of profit. But it has worked out for a nice little trade. And so now we're going to take this and convert this to a confirmation entry in case we get back up there again. All right, next. bonds and currency markets. So our ZN, which is our 10-year note, we had a supply level up in here. Price came into the level. And then let's just taking a look at it, knowing our 6 candle rule. 1, 2, 3, 4, 5. After 6 candles, it had done quite literally nothing. Now, we popped a little bit above here, but you've got to give yourself some room on the stop. And in this case, your stop would be up above this pivot here. I always put that stop, above that pivot. So there's no reason to have gotten that little stop out there. However, it didn't move anywhere. So you should have taken, frankly, in this trade, less than the stop out loss. Now, this usually leads when I start to see that pattern and that setup, that now becomes a potential for a breakout going higher. Whenever I see basing inside of a level. Now, with that being said, if I look at the 4-hour chart, we can see that we are definitely in a defined upward trend. So now what I need to do is take my upcoming supply levels and switch them to confirmation entries, because my big picture trend direction has changed. And the change of the big picture trend direction means I need to look into something different. Other thing that we'll do is take this level here and look at this wick over wick area right there for a potential long on a reversal. Okay, the Aussie, we still have our breakdown below this line if we get the basing in front of it and a reversal in here, so nothing to add from yesterday in the Aussie. In the Euro, now the Euro level, we had set up for a potential reversal right here. Now we did get, this is actually a really interesting study in price action. So you got a little bit of a move away from here. Matter of fact, if we do the, this level, if you put your stop way above the pivot, then you've got a touch, and price just kind of moved around out of here. You got a little bit of a 1-to-1 reward to risk. If you kept your stop super tight and just to the width of this zone, then you got about a 2-to-1 reward to risk out of it. However, great picture if you of price action to learn from here. And the reason I say that is because as price came into this area here, we were basing below the level. So right there is where we had a bit of basing below the level. Right here, we came close to it, didn't get in. The second time, if you notice, we traded all the way into the level and then moved away. The third time into the level, we traded through the level, right? So now we've traded through the level, so we came close to it, moved away. Came all the way into it, moved away. Traded through the level is now dead. And then we got a reversal. Price moved back through the level, we popped up. So why is that of any validity now? Well, now that same area, I think, could serve as kind of a fair price value area in the future. I talk a lot about fair price value areas, and so I'm going to wrap my lines around this area up here as a potential reversal. However, because of this wick, this would even still need to be a confirmation entry. So it's a good study in how levels get hit and they weaken over time. In the Canadian dollar, you can see that we were just kind of chopping along sideways. We didn't add anything yesterday, and rightly so. No real changes in what we've done. Great British Pound and Japanese Yen as our last two markets. The pound is sitting in a sideways price action. I do see a little bit of a potential for price to break down below here. So you've got really two potential breakdown areas, and let's kind of split the difference and look at it here. Look and see if we get some basing there. If we do, it could make this demand zone a little bit wonky. So keep an eye on that area for a potential breakdown. Sometime today, this demand area could be a little bit weakened on that move. And then the Japanese yen, this is a picture of price came halfway into the level. We got a nice 2-to-1 remove away from the zone. The second time in, we came into it, and then we got another little move away. So this level is now going to be dead. Worked out pretty well overall. The first supply level did not, however, as it went right through that smaller. We were looking at a super small time frame level, but the second level worked out for a nice little 2-to-1. And now I would go back to here as a potential for a reversal. All right. So that's those are our levels for today. If you've got any questions, please send us an email, support@tradersarmy.com. Hope you guys have an absolutely amazing